Hi, this is Zach from Zach's Traders Cafe with a look at some single stocks on Friday, the 30th of September. Starting off with Barclays, and not surprisingly, given the Department of Justice and Deutsche Bank and other negative factors at the moment, have had a gap down through the 50-day moving average, currently 163, while below the top of the gap, which is at 166.5. There's the risk of fitting the initial August gap, as suggested before, down at £1.52 over the next couple of weeks. Got the possibility of a target with this falling June trend channel as low as 140 by the end of next month, while we hold below £1.66. Happier picture at sentiment, the gold miner. Here you can see that after the mid-September bear trap rebound from below the initial 143 floor, we've had a decent bounce gap to the upside through the 10-day moving average, while above 143, initial target 158 at the 50-day line, and then looking back towards the best levels of the year through 180 trajectory, something along the lines of this rising trend channel I'm drawing at the moment, eventually heading towards £1.90, let's say, over the next couple of months. On to one of the low lights of the week, rather, the warning from outsourcing group Capita. Here we've just retraced earlier a fraction of this breakdown after the profits warning, not even yesterday's candle, not even half of yesterday's candle. So risk now back below the back towards the 600 pence level, which is an April support line projection, and that target valid really well. We remain below yesterday's close at £6.98 on an end of day close basis. The only plus point at the moment is the RSI is very oversold at 10.2, but clearly, as we know, stocks and markets can remain in such zones for rather extended periods, so you can't always rely on that being a cue to go long. Cloud Tag is next, one of the most remarkable situations in the stock market at the moment. Broken through that 15.5 pence initial September resistance, above that heading for 25 pence at the top of a rising August trend channel. Really a remarkable looking progression there in terms of the sheer strength that you can see on that chart. On to Domino's Pizza, which I haven't looked at for a while. Consolidation here, still waiting for a break above the 50-day moving average at £3.70. An end of day close above that should take us easily towards the top of the range of the year July resistance at 400 pence plus. The overall trajectory here probably back towards the 430 to 450 area, which is the top of a rising June trend channel. If you're cautious on the shares, wait for an end of day close above the 50-day moving average at £3.70. On to Prudential, a stock which I haven't looked at for quite a while as well. Shares haven't really done much since at the end of July, bouncing off the 200-day moving average of 1333. While we're above that, we would expect a push back towards the top of the range of 1400 pence, but we really don't want to see an end of day close back below the 200-day line, as that would open up the prospect of a pullback towards the 11 to 12 pounds main support zone for 2016. Finishing off with the company reporting today, Speedy Hire, really basically in a range, heading towards the top of that range of 40 pence. Best case scenario here, probably while we're above the 10-day moving average at 34 pence, is to head towards the top of this rising June trend channel at 41 to 42 pence as soon as at the end of next month. That's it from me. More updates at the same time on Monday.